Welcome to Agepartnership's head office. Today we're joined by industry expert James Dean from Agepartnership's Retirement Income Service. James joins me to discuss the various options you have to turn your pension savings into an income during your retirement, something that is especially topical given the changing pension regulation that means you now have more choice than ever before. So thanks very much for joining me today, James. So first of all, could you tell me a little bit about pension regulation? There's been a lot about it in the press at the moment, and the government are talking about people releasing their pension savings. But what does this actually mean for your clients?
Well, for our clients, it will affect them over a period of time. Some of the changes are happening now, some of them are happening in April 2015. So for clients with less than £30,000 in pension savings, or those who have got pension pots of less than £10,000, they can now take those as a lump sum. The first 25% of those they can take as tax-free. The rest of it is taxed as income. For those clients who've chosen drawdown, there is restrictions on the amount of income that you can take. And the government has changed that now, meaning that most people in drawdown or choosing drawdown can take a higher income now. Now, from next year, the biggest changes come in. The proposal from the government is that you can actually take all of your pension fund as one big lump sum, which sounds very appealing. And like with the other options, you can actually take 25% of that tax-free, but the rest of it would be then charged to income tax. Now, for some people, that could mean a very large tax bill. And for some people, that could be higher rate tax, 40%, and possibly even more. So that is a concern. Now, all of these changes have generated an awful lot of interest and a lot of comment in the newspapers as well, and on the TV and on the radio. And as such, people have become aware of all the changes that are now available to them and just wondering which options they should be considering to access their pensions.
Well, that sounds like a really good thing.
It is a really good thing. It's very positive, there's lots of options, there's lots of flexibility and choice. And people are much more aware now that they don't have to stick with their existing pension provider and take the default income that they offer to them. So this awareness is that they can choose more options, shop around for things and pick what's right for them.
So what pension income options do your clients have?
Well, they've got a number of options, but with all the options they do have the chance to take tax-free cash. So they can take 25% of their pension fund as tax-free cash. Now, of course, that does reduce the fund and therefore it does reduce the income. But because it's tax-free, you don't get too many opportunities for that. So most people do actually take it in the end. If you think about what they can do now or from April 2015, though, there are two broad options. So there's an annuity and there's also a drawdown. So we'll have a look at what the difference is between those. So an annuity, it provides you with a guaranteed income for life. So that gives you some certainty. You generally know what your income is going to be month in, month out. So it's predictable. But because it's certain, you also don't have too much flexibility with it. So you generally can't change the options or the level of income once you've taken one, or cancel it and do something else. With drawdown, it does offer you flexibility, but it doesn't offer you the income guarantees of an annuity. So what happens is that your pension fund remains invested, and you then decide on the level of income that you want to take, which means that it's very flexible and you can go back and you can change things. But with that flexibility, you also have to take on the responsibility of actually managing your pension fund, especially to make sure that it does last your lifetime.
That's really interesting, because I hadn't actually realised what all the options were, and I think perhaps other people probably feel the same.
No, you're right. Most people aren't aware of the options that are available to them. And what we've talked about today is only the briefest of overviews. So if you are wanting to know what those pension options are, the pros, the cons, that is something that Agepartnership can actually help with. So whether you are looking for something that gives you that security of a guaranteed lifetime income, or the flexibility that drawdown can give you of your income, whether it's invested and maybe to grow your pension savings, that's something that we can certainly help with.
So does everybody need financial advice, and do you offer it here at Agepartnership?
We do offer financial advice, but no, not everybody needs it. Some people are more than happy to make up their own mind, and we can provide them with information and support to pick what's suitable for them. However, there are people who would like us to provide them with some financial advice, so we can work with them on their circumstances and make a recommendation of a particular option that will suit, and they can work with one of our friendly financial advisors. But ultimately, it's not a one-size-fits-all, so it will depend on their circumstances and what they actually want to do.
Well, that sounds great and really helpful and useful to everybody, really. Unfortunately, that's all we have time for today, but if you have any questions about anything discussed, please don't hesitate to call Agepartnership's Retirement Income Team on free phone 0800 975 5151. Thanks for watching, and do join us again next time.